And we're live. It feels like I haven't talked to you in so long.
Long time no see. Oh wait, no, we just did it. Yeah, it's good to see you again. We decided we do a bootleg weekly. Just there's some macro news. We also want to talk some Palantir, and we believe that we'll have a special guest. RKLB earnings is coming up as well, and so he'll help preview that, so you can kind of guess and infer who the special guest might be. One thing that we probably won't do tonight much, except in the Q&A period, which will be at the end. So be sure to put your questions there. We'll tag them through. Is talk about hymns. Why are we not talking about hymns, Titus?
Because we just got through a 2-hour-long episode dedicated to hymns with 7 people. Literally every hymns investor. I shouldn't say that. A lot of the loudest advocates on hymns that are on X were gathered for the purpose of convincing Steve and Tanner to invest in hymns. And so we had a mega 7-person podcast on hymns for 2 hours. Check that out. It's on my channel. It's on Roy's channel. And we just got through that at 7 p.m. And so now at 8 p.m., naturally, we are jumping on the Bootleg Weekly.
Yeah. So as far as hymns, good earnings. But if you want to look at a longer discussion of that, go into that. We'll probably leave it at that unless there's questions in the comments and everything. So how you doing, Tevis? Anything you're watching in the market? Anything you notice as far as macro? I think maybe we'll save Palantir earnings for a bit in case our special guest is able to make it.
I bought a bunch of hymns yesterday. So that's been one of my trades. I bought a bunch of NVIDIA, I think yesterday or Friday maybe. Bought about 100 shares, and then I bought about 300 shares of hymns, and wrote some covered calls on SoFi for next month at 16, and yeah, doing pretty good.
Yeah, still in the middle of earnings season. Still a number of big names left over the next couple of weeks. Of course, one of those significantly is NVIDIA. It's a few weeks out, usually late in the earnings season. And I don't mind that, to be honest, although we can kind of infer what their guidance will be just based on the large cap comments. And yeah, there's a lot of interesting things that are coming out. Now, do you want to go with macro first?
Yeah, one other thing I want to add to the docket is Robinhood earnings, because they reported earnings. I mean, you talked about this probably yesterday, but Robinhood reported earnings on Wednesday, so we wouldn't have been able to catch it on our last bootleg. But I did have a chance to sit down with the CEO and chat a little bit about earnings, and I think I want to buy some more Robinhood, honestly. So I'd love to talk about that one as well.
Yeah.
At some point.
Yeah, you're a shareholder. Why not? So, but let's start with macro.
Let's start with macro.
Well, let me change that. And here's a screenshot.
Drink first of all.
Can you throw this up and all? No. So tomorrow, Fed meeting. That's why this is the May 7th date. This is the Fed Watch tool that shows rate cut probabilities. So we'll get an announcement as far as what's being priced in. Yeah, basically the market is saying, and people are saying, there's no chance of a rate cut, no meaningful chance of one anyway in May. And that's probably about right. June is a little bit more interesting. June has shifted actually a lot back and forth. Although if you do look at it a month ago, it's like, yeah, it's basically flipped. So a month ago, we were at 1 cut. So they were expecting the first cut in June. And now a lot of people are saying, nope, there's going to be no cuts. And also for December, the end of the year, we're still actually, looking at several cuts. So right here, rate cut probabilities are pricing in actually 3 rate cuts or 4 rate cuts, depending on what you think is going to happen. Now, are rate cuts bullish or bearish?
Generally bullish, because the market goes more risk on whenever rates are lower. The cost of borrowing is less, which entices more investment in research and development, entices more growth in these companies. And so generally the markets feel that they can take on more risk.
Yeah. And largely it depends too, like whether they're cutting it because things are falling to pieces or because, hey, mission accomplished, inflation is dead. And so, yeah, I don't think they're cutting tomorrow. I'm skeptical now on June 2, just based on everything that's happening as far as macro and stuff. Matt.
There he is, my arch nemesis, Matthew Money.
Gentlemen, thank you for allowing me some time on your great podcast.
We have a very busy schedule, Matt, so we were able to squeeze you into this one.
That makes sense.
I am pumped you're here. I always am glad to talk to you, but
I am too. We have to get lunch soon, brother.
Yeah, absolutely. But we had Palantir earnings.
We'll talk trash about Tevis all the time.
Oh yeah.
Oh, you can do that without the lunch, even.
I'll call you after then, Rick.
We got to go to that Korean fusion place.
Sorry to interject.
Yeah. So yeah, tonight we want to talk about Palantir and Palantir earnings a little bit. Let's talk Rocket Lab, because I know there's a lot of people that follow and are interested, or at least have heard about this. They're reporting relatively soon. You're a big Rocket Lab bull, unless something has changed recently. No, there's no change. And I really want to talk about too a little bit of macro stuff. I think we'll finish that off here in the next few minutes. I want to pick your guys' brain on something that I see as a kind of emerging macro trend that actually, like PayPal, one of the PayPal guys, one of the PayPal products that they are in the process of launching, because they're actually building things not for today but for tomorrow, which is really good for PayPal. But it's an interesting trend I haven't thought of, which impacts potentially Google and a lot of other companies, some positive, some negative, and I've not seen a lot of people talk or think about it. So maybe we'll finish off with that one, and of course we'll have a question and answer too. So the only other like macro thing, do you have the tweet pulled up, Tevis, or I can pull it up?
Which tweet is that, sir?
The on the Trump stuff?
No, I don't have that pulled up.
Okay.
There's a lot of stuff, Roy.
Yeah, so basically after hours, if you guys have noticed, is pumping, and I put it in our previous chat, and I'm not finding it right now. But in essence, Trump had said that he planned that there's an earth-shattering announcement that is coming out soon. Hold
on. I'll play the clip. I'll play it. Hold on.
Okay. And I've got it now. I'm sure you do too, though.
And those days are over. Those days are over. And, I said before in our meeting with the new and very talented Prime Minister of Canada that we have some very big announcement to make. It's not about trade. It's about something else, but it's going to be a truly earth-shattering and positive development for this country and for the people of this country. And that'll take place sometime within the next few days. And those days are over.
So it has to do with Canada, apparently?
I've heard a lot of different rumors, so I have no idea. What I think it might be is he mentioned earth-shattering. I think maybe he means this in a literal context, so like fracking on a global scale, which would shatter the globe and we would all die. In which case, probably short the market. Oh, wait, no. I honestly have no idea at this point. I was at first, when I saw that, I was thinking the pharmaceutical manufacturing thing, but I don't think that's earth-shattering. That's known to come out on Monday. He said it wasn't trade. What are your guys' guesses?
I mean, he said it in the same sentence as the new, I almost said governor, the new Prime Minister of Canada. So I'm assuming it has something to do there. What could it be in relation to Canada that's not trade?
I don't know. What I will say is while I was taking a break between your guys' really good hymns coverage and now, I was watching the actual Prime Minister, the new Prime Minister. Oh, geez. All right, guys. I'll talk to you later. No, I'm just kidding. No, I was watching the great stream. Sorry, Trump TV. I was watching pretty much, and the Canadian, the new sworn-in Prime Minister of Canada was there, obviously, and he was talking about Trump was talking specifically about how they're going to go into the UAE next week, and so, or at least he said Middle East. So I'm anticipating he said UAE, though. I'm pretty certain. And then he brought up the announcement, and so my initial thought was, I know the UAE, I will say, has been very much about U.S. LNG and investing in U.S. LNG. And a lot of the Middle East countries have been about securing U.S. LNG because we are the largest exporting nation of LNG in the world. And we have been for a couple years now, and we've overtaken Australia and Qatar, who is also well behind, or slightly behind us, rather, not well behind, but slightly behind us. And so my initial thought went to that. Is there going to be an announcement of further investments in the UAE into the United States? I'm thinking companies like Next Decade, Venture Global, that are still commissioning or bringing on new facilities that need long-term purchase agreements, SPAs. And then second, if it wasn't that, the thing that we haven't talked about in quite some time, and I have heard go quiet over the past couple of weeks, is really the golden trump card. And that's something that we haven't really heard about. So the $5 million card that will allow you to basically expedite citizenship and allow rich folks that might have businesses or anything of the like to expedite their visa process and allow you to enter the United States. And so I know for a fact that this plays a big piece because a lot of people are competing not only get into the United States, but also Canada. So if they don't have the opportunity to go to the United States, they actually go to Canada, get their permanent residency card while they're waiting to get their U.S. citizenship. So I think that might also have been a potential reason why that came up as well, is the opportunity to have the Trump card.
It's interesting, Matt, because in the context of the conversation that was going on earlier today, when the new prime minister visited the White House, the reporters brought up the 51st state thing, and Trump was like, "Well, never say never," and then the new prime minister basically said, "There's some things that are not for sale, but we look forward to a partnership with the U.S." And so I'm also thinking of it like, obviously this is much less likely than some type of thing to do with oil or minerals, but the other thing that's been floated around less recently, but I think it's more realistic of an alternative, is some type of union for North America, similar to how Europe has the EU, where it's like, you have one like currency, you have open border, like similar to like what the EU is, but for North America. I think that could be an interesting development too. Obviously not holding my breath for that. That's like the moonshot. But I'm just putting the hints together that like they had a conversation today around Canada and the US. He has made intentions that he wants to be more involved in that. And he's basically talked about the subsidies around like, hey, like if you guys were more involved, like if we had some benefit, there would not need to be any of these tariffs. And he said it's a positive development that's not related to trade. I don't know. So maybe.
Mr. Fiorillo, good evening.
What's up?
So here's the other macro real quick. I don't know that we want to discuss too much, but because it's not speculation, it's confirmed, apparently. So there was a mention, and this was really what pumped the after hours. Besant had said, I'll meet with the Chinese on Saturday and Sunday. Discussion will be on de-escalation. There was an earlier mention, by the way, but that was some more detail. And then the Chinese Commerce Ministry basically confirmed that. They said, yep, we are planning to engage. Whereas before, when they talked about discussions, Trump said something and the Chinese were like, that didn't happen. You're totally making it up, essentially. So, yeah, what are we thinking? Into the tariff malaise? Maybe?
It's so like it's all manufactured chaos, man. Like he causes the market crash and then he causes the market rally. And it's just like, okay, I'm the hero now for a problem that I literally caused, a month ago. I understand the whole geopolitical game theory of it, but from a market perspective, it's just kind of funny, right? Because now everybody is rallying and like the market is super up in after hours on the back of like a deal with China. And I'm like, well, a deal wouldn't even be needed if this situation had been started in February. So it's literally been like 2 months.
I solved the crisis I created.
Exactly.
We'll see what happens. There's a lot of stuff happening. Things can shift on a dime. It's definitely not been a boring market this year. So,
Yeah,
and
Steve.
speaking of not boring, go ahead.
Well, I was curious to ask Steve, like, what do you think, Steve? Just if we're throwing spaghetti at the wall, what do you think the earth-shattering announcement is that he's talking about over the next couple of days?
I have no idea. It's either a deal with India or a deal with China.
A deal with China or
A deal with India.
India? That's interesting, considering what's been going on there, because that's been the other news around the after hours, the India-Pakistan conflict. You know, they've been scuffling for decades. Nothing burger. This feels different. What do you guys think about this? Just on that macro point, then we can move to stock specific. Anything there, or just, you know?
I have no idea. I don't know it well enough. I've seen it, previously, but I don't know if it's different or not. I'm too ignorant on that section of the world. So,
Yeah, I'd like to bow out as well. I'm not nearly intelligent enough or educated enough on geopolitics, specifically in that region, to give any sort of meaningful input. But I just, I don't like war. That's all I'll say.
It seems as though protests are now breaking out after there was a strike earlier where at least eight people were killed in action. So it seems that tensions are escalating. So I guess we'll have to see how that develops and what that could possibly have as impact for the rest of the world. I'm sort of with Matt on that, like, hey, can everybody just get along and we can all just make some money and live a good life? But obviously that's a very glass half full way to look at it. Roy, maybe that does lead us into Palantir. I don't know.
Yeah, I actually had somebody ask me the other day, is like, okay, so if you have a moral position on Meta, like, how do you not have one on Palantir? And it's like, well, Palantir is a lot more than a war stock. It's a lot more than a government stock. It's doing a whole lot of good. It has designed to preserve and protect the West and Western values and freedoms. I think that's a great thing. And if we look at the actual earnings, like they're killing it. But 3 out of 4 of us own Palantir, and 4 out of 4 of us would say it's really expensive, really, really expensive, not just a little bit expensive. Some of it's justified, but I don't think any of us, I might be wrong, correct me if wrong, but I don't think any of us are buying it here. We're okay holding it or selling covered calls against it. But, and it's one of the reasons why Palantir, despite way better than expected earnings, has been selling off today, even though it was a okay macro day. Even in the after hours, it's not up too much. That doesn't mean it can't go up further. It can, but I wouldn't also be surprised to see it retrace to where I have my covered calls, and I'd be okay with that.
So, look, I'm probably the most bearish on Palantir out of all of us.
Yeah.
But, all right, take Tevis out of it. But
one sec before you start, Steve. Bearish on the stock or bearish on the company?
No, the valuation.
There you go. Okay, go ahead.
This is an incredible company, and the quarter was amazing from a business aspect. The problem that some investors are not looking too deeply into, and look, it's recovering slightly. It looks like the bleeding's ended in aftermarket, but the earnings were not great from a numbers perspective. They were priced for perfection, and meeting expectations on EPS is a problem. Their revenue growth is phenomenal. The business metrics are phenomenal. The arguably best metric was net dollar retention at 124%. When you are adding customers the way Palantir is, and you're signing deals the way Palantir is, when you have a net dollar retention of 124%, that is going to create an exponential S curve going forward in revenue. There's no question about that. But the dilution of shares makes EPS harder to achieve because now all your operating income is divided across more shares. And 2, around 36% of their net income over the past 12 months has been generated from interest income. So when you're diluting shareholders and adding more shares for operating earnings to be divided across, and when the Fed starts cutting, it's going to make it a tougher comp environment because you have more factors going into it. The real question is, can Palantir keep a 39% revenue growth? Maybe they can. They may even be able to get past 39%. But I think this is going to trade in a range. I don't think it's going back to 40 or 50, where I think fair value is. I think it's going to trade in a range of 70 to 100 for the next however long until it grows into the valuation, only because there are so many people not selling here. And the fact that it's not selling off after hours too, it may have established a base. But this was priced for above perfection. If you can get there, and not beating on EPS is bearish for where people had this at after earnings.
They missed EPS?
No, they came in line.
Oh,
Look, and the revenue beat on guidance of 21 million or 22 million wasn't a huge beat either, but it was still a beat. The fact that they came in line on EPS, when you have that high of a valuation, you're trading at 600 times net income prior to earnings, that's not great for the valuation. Sorry, it's not.
Yeah. I'd love to hear your comments on that, Matt. I talked about this a bit yesterday, but
For sure, yeah. On a trailing 12-month basis, I think there's no doubt that earnings do look expensive, specifically from a GAAP, general allowed accounting principles sort of methodology. If you kind of look more so on the cash flow from operations, it looks a little bit more digestible, but we're still talking about, 1.1, $1.2 billion in ops cash generated in a $250 billion company, right? So, I mean, it helps a little bit, but you're still trading at over 200x in terms of that multiple. And that just means that it's expensive. So in reality, you're going to need to not necessarily just grow it at, say, 20, 30, 40%. You're going to need to grow this at, high above 50%, 60%, 70% for several years for this to really come into its valuation. And so the only place that I see that could help with that is we have seen spike ups with respect to the ops cash margin really starting to flow through. Last quarter it was over 50%, which is huge, meaning every dollar that came into the company in terms of revenue, 50%, actually 58% of it was generated into actual cash that the business can use. And a lot of that went to the balance sheet of over $5 billion. And so my thought process is that they can continue to have that, which they printed a 35% in the first quarter of this year, meaning every dollar that came in revenue, 1/3 of it went directly to the balance sheet. I mean, that's absolutely phenomenal. And if you're able to continue that trend and grow, there's a lot of leeway between where that gross margin is and of 80% plus. I think we printed 82%. 82%, and previous quarter was 83. And there's a lot of land between where that margin could end up, but overall, it's still massively overvalued.
Yeah, Matt, let's be clear that the free cash flow was just over 33%, and net income was just over 24% margin. And EPS is off of net income, not free cash flow. So look, with the Fed cutting potentially 3 or 4 times this year, that's going to make a tougher comp environment, especially Palantir showing no signs of stopping dilution.
I don't disagree, but what I'm looking more so is at ops cash, and that removes the income from kind of the interest, if that makes sense.
So I'll show just a couple of things off real quick, and maybe we can comment on those too. So, and again, valuation of the stock, it's really, really high. Wouldn't be buying it personally right now. I'm actually thinking about taking a little bit more off the top. If it does run up more, it's fallen in, and I'm comfortable holding it where it's at. This is pretty significant. I mean, if you go back in previous slides, and I need to chart this, probably Amir already has a chart or something, but they mentioned that they've signed like so many more deals over the last 2 years, but even like quarter over quarter, clear acceleration. This to me, like of the at least 1 million, and you do see a lot of these are at the 5 million range. We don't know like the terms, the length, or anything. We know some of who they are, but a lot of these are extensions to the net dollar retention stuff. But clear acceleration. They have, as far as guidance, like they really ramped that up as well. That was a tremendous beat in guidance. And then if we go down and we show not the RPOs right here, and I'll have to kind of slide this over as we go through, but this is business to business business. So in essence, you're not going to have too many quarters where it goes like, 13% to 38% to 12%. Like you will have some lumpy revenue, but you can see this is year-over-year revenue growth and adjusted margin, operating margin, just the power of what Palantir is able to do as far as execution. And so, like, is there a scenario where they grow year-over-year 40% this year? I think it's pretty likely, actually. As margins continue to even improve more, the rule of 40 scores 80-something%. Is it still expensive? Yeah, it's very expensive. The last thing I wanted to show was, and I really thought that they showcased this very well in earnings right here. Yeah, this slide. Sean, well, before I think it was Ryan, it talked about basically a lot of the things that their own clients are saying about Palantir. And if you look at like the app quarter, you go and you search for Palantir, a lot of companies are talking about Palantir and the impact that it's made on their products. You can see that in their investor days. You can see that in their earnings calls. And that's not Palantir talking about Palantir. That's others. You see that at AAPCon as well. And this was one of the most ridiculous. I shared this last night, and Tanner almost like, he's like, there's no way that this is real. Like, how could this be real? That AIG expects their adoption. And this is from their investor day. AIG investor day. Alex Karp was actually invited there. He spoke there. Obviously, they have a very close partnership. But they expect the adoption of an AI-powered underwriting solution leveraging AIP to double its 5-year revenue CAGR from 10% to 20%, which is for a business like AIG. And if you go on the investor day, like they talk all about why and the underwriting and everything, man, it's incredible technology. It's a great company. There's still a price where it's too much to pay. Thoughts, guys? What price would you pay, Tevis?
I mean, look, I asked you guys this in the last, podcast on Friday when Steve came on and basically argued the valuation point. I said, look, even if I gave you $50 a share, which is what, a 25x, close to 25x price to sales, something like that. And I think that's very, very generous from a valuation perspective, still pricing in a lot. Like that's less than half from where it's trading at right now. And it would still be richly valued. I'm not saying it would be like, crazy overvalued with regards to the total addressable market and where it's going or whatnot, but like it would still be one of the more richly valued stocks in the market. And that's less than half of what it's at right now. So, yeah.
All right. Any other Palantir comments, guys? Or we said what we said and move on to Rocket Lab?
Well,
sorry, go ahead, Toast.
I kind of like to hear from other people, like what is the price that, and I mean, obviously it's a little bit different because you guys all own it, but what is the price that you would, if you didn't hold a position, with all that you know about it, what is that, price for you guys, right?
It's hard because I do think it'll be $1 trillion company. I just don't agree with Dan Ives or anybody else who thinks it's going to be 2 or 3 years. I think it's going to be 10 to 15 years that it gets to $1 trillion. I mean, there's just mathematically, there has never been a company to generate less than $5 billion of free cash flow and get there. It just hasn't happened. Tesla's the anomaly, and even Tesla was generating more than 10 billion in free cash flow when they got there. Now, when you talk about software companies, at the end of the day, Palantir is a SaaS company, regardless if they're the leader in AI or not. They're still software as a service. The market has already spoken about what these companies are generating in the valuations. Even if you give them a huge valuation, If you say, I don't care, I want to get in case I'm wrong and I'm going to DCA and I am willing to hold it for 10 or 15 years, I don't think it's crazy to start buying now, as long as you're going to scale in and buy on the way down if it goes down, and you're going to legitimately hold it for 10 or 15 years. I don't know many people that have that stomach to hold it for that long. If you're not willing to do that and you want to pick a price without DCAing, for me, obviously, because I already own it and have a pretty big position, I don't think that I would buy it unless it hit 40 again. It's just, there's no reason to own it when you can buy Nvidia or Amazon at these levels and they're so deeply discounted and they're trading at less than 20 times forward earnings with between 40 and 50% EPS growth over the next 2 fiscal years. So there's just other opportunities that can go up by 50 or 100% over the next year or two, rather than Palantir, which I think is going to be in a sideways trend once it establishes a new bottom, wherever that is. And I think the range is 70 to 100 for a while.
Yeah, I don't disagree. I think Steve brings up some really good points, but I would probably raise where I would start to purchase at closer to $60. I actually have some cash secured puts that I've been selling at that value, and that's kind of what I'm using to generate a little bit of income. And then if it does actually get to that point, I wouldn't mind actually taking ownership of some of those shares. It's not a large cash secured put position, but it would add substantially to my current existing position, just not double it or anything like that. But I agree with Steve. I think, to me, I look at it slightly differently, though, Steve, and with all due respect, right here, you're at a, I don't know, 250 to 260 billion dollar market cap. If you were to get the 50, 60 billion, you would be back below 150 billion dollars. If you do think it's $1 trillion company and a $1 trillion opportunity, then you're looking at a potential 8x at that point. And who knows when it's going to be? It's not going to be 2 to 3 years. I'm with you. I got excited when Dead I've said he thinks it's $1 trillion company because, hey, when this thing first came out in 2020, I said it could be 100 billion easily. And then, the more I found out and knew about the company, I moved it to 250, potentially to $500 million. $500 billion. And now, obviously, with what we know and the expansiveness of their customized software, I could easily see this being the enterprise software of any modern enterprise and overtaking potentially the enterprise software business from Microsoft. Obviously, Microsoft has its own revenue streams. So will it overtake Microsoft in terms of market cap? I don't know. But what I can say is in terms of enterprise software, I think it could become the premier for enterprise. So to me, I think that if you honestly believe this will be $1 trillion company, it doesn't make sense for you not to purchase at $50, $60.
Yeah, and keep in mind, when I make a comment like that, I'm think about what I said. Over the next year or two, I think that Nvidia and Amazon could double based on where they're trading today. When you look at Walmart trading at 31 times forward earnings and Costco trading at 45 times forward earnings, if people are willing to pay that for companies with not even half the growth of Nvidia or Amazon, I do think Nvidia can get to over 200 in the next 2 years. That doesn't mean that I wouldn't sell Nvidia or divert new capital into Palantir at that point, because most of the growth, unless the investment story changes, I would probably redivert into Palantir at that point. But I don't know what's going to happen at that point. I'd have to make that decision. But based off of the facts that we have now, if you say over the next year, what has more capital appreciation? I think the percentage, if you're going to put money somewhere, you got to put, say, Nvidia has a better chance at generating 50 to 100% versus Palantir from these levels. I mean, Nvidia's highs were 156, it's trading for like 114. So if they have 2 blowout quarters this year, they could get to 170, 180 and make new all-time highs. I don't see Palantir making all new time highs this year.
So let me ask you something, Steve, and Elizabeth sort of brought this up, and I think it's a really valid point to bring up. Because I think it speaks to the investing philosophy of you guys that I'm more so curious to learn. Because Elizabeth basically said, if Steve wouldn't buy above 40, why isn't he selling? To say that if you believe that at these levels, let's say, from a compounded annual growth perspective, Palantir is massively going to underperform NVIDIA, say, you've already invested in Palantir in the single digits. You've already capitalized on that run up. If you think it's going to stagnate for the next couple of years, why wouldn't you just buy NVIDIA?
Here's why. One, the tranche of capital that I put into Palantir, I don't necessarily need right now. And I don't need to move it into something else. It's also in a taxable account. So I would have a pretty big long-term capital gains I have to pay on it. That's one. Two, I truly do think it'll get to $1 trillion, and that's capital that I have already earmarked to lock up for 10 or 15 years. And regardless, if you want to do the math and say, even though you would still come out better if you sold, paid the taxes, and waited, my thing is, what if it doesn't do that and I'm wrong? I can't predict the future. It could be an anomaly that kind of goes to 80 and then rebounds and goes back up. I'm not willing to miss out on that. I have other capital I deployed to NVIDIA, and that's where I would deploy new capital. But because I don't need the money right now, I don't want to sell it, pay the taxes, and then if it doesn't go down, that's just less shares I would have. So I'm good with the position I have right now, and I'm just sitting on it.
Fair. Right.
Yeah, I was going to give my answer as far as like the price question. I if I didn't have any Palantir right now, maybe 70, maybe 65. Very slow DCA, not fast. Cash secured puts would be a good way, for me to go and add more to at a lower price than that. Myself, like if Palantir falls to 55 or thereabouts, I'm going to start DCAing again. My average is 12. I don't care about my average. I want to make money. Is that expensive by metrics? Yeah, it sure is. But this is a company that is just ridiculously positioned. And the valuation is really the only risky thing about Palantir. Like I don't see anything else risky, what they're building, their moat, anything. There's actually more business risks to NVIDIA, although it's extremely well positioned too, than there are to Palantir. Significantly so. Although the valuation on NVIDIA reflects that. So there is a price that's way too much to pay. There are tax implications. That's one of the reasons why I'm not selling what I'm doing. I can sell covered calls as well to hedge. I can sell covered calls to make some money while I'm sitting there. So I'm not like sitting on my hands doing nothing. But it is one of those companies where they say never fall in love with a stock. But I've fallen in love with the company. I really like the company. I like what they're building. I think it's critical to understanding the story of what's happening, especially in the United States, and the continued gap in productivity between Europe and the United States. International revenue actually fell for Palantir. And it was really because of Europe, that there's extreme headwinds over there. They just don't get AI. The way that they approach most things that are novel at this point is like, hey, let's overregulate it and hope it goes away. And you can't do that with something real. So anyway, it's a unicorn of a company. I want a piece of it. I will hold some probably until my grave. I can't guarantee that. But I'm in this largely to make money, secure financial future for my family. And so I will sell and take profits along the way. I'm not going to hold, even though I do see it $1 trillion company, but like if it pumps up to 150, I'm taking a good chunk of gains as well. Like if it does that over the next few months, 200, I'll still have some Palantir, but not much. It'll be maybe 10% of my portfolio at that point, not the whatever that would be, like 70 or 80% at that point. Cut that way down.
Yeah, I mean, like, look, man, everybody is going to sell all of our stocks at some point or another. I can't, pay the bills with my stock certificates. I got to convert it to cash first in order to be able to spend that money. The market is a tool. Like, I don't think anybody is, like, I understand the concept of like, don't fall in love with a stock and you can hold it for longer. But at the end of the day, it comes down to what you think are the future prospects of this business continuing to compound from today onwards. Like what's happened in the past 3 years, congratulations. You guys have capitalized on that, and like you have locked in those gains. But today going forward, if you think it's a 3X opportunity, then you're comparing it with other 3X opportunities versus 4X versus 5X versus whatever. Right. And so that's where I'm in this position sort of with Tesla, right? Like I think that Tesla right now has a higher level of risk associated to it than it did in previous years because, you know, the CEO's attention is diverted, because, you know, their focus is dwindling, all these number of reasons. And I'm thinking to myself, like, what is my sunk cost fallacy? How pot committed am I? Because I've been holding this for 5 years now. Do I want to sit through more potential risky times with the underlying like promise that they're going to execute, even though it's uncertain? Or do I want to just like, hey, take my winnings and like leave the table, cash out? And so I think it's a fair question to ask, because I've been asked that same question and I haven't really had a good response. And so I want to learn from you guys, like how you think about it. Because for me, for example, I think it's very valid to say, hey, Tevis, like you've made money on Tesla. You've invested since 2019. There's nothing that's really like those gains from 2019 to 2025. I've already locked those in. It's reflected in my stock price cost basis. So there's nothing really that's holding me other than the future prospects from today, from this point forward. And I think it's going to be the same with Palantir, with, you know, HIMS at 40, with any stock that's run, it's going to be the same equation.
Can I give you an example?
Please, yeah. And taxes can't be a reason, dude. Like taxes cannot be a reason.
I've owned Meta since the IPO.
Right.
Have not sold it because my wife and I still believe it's going to continue to go up. And
Yes.
we don't need the money right now. So that's something that we've had. I think they went IPO in like 2011 or something like that, somewhere in that area. It's been over a decade. So we haven't sold.
Yeah, but Steve, here's the difference.
We still see value. Now with Tesla,
exactly. Last night when we were on the phone, you said it's crazy how undervalued Meta is. You would still buy it today if you didn't hold a position. The same
100%.
cannot be said with Palantir.
There is no question about it. I think Meta is one of the most undervalued stocks in the market for a number of reasons. But when it comes to Tesla, I would say if I bought Tesla 5 years ago, which I didn't, my average price on Tesla, I think, is around 140-ish or so after all the cover calls I've read.
Right.
When my cover calls are done, if my shares do not get called away, I will be writing cover calls very close to the money to get out of my position, because I think Tesla is not going to do well over the next couple of years. That's my own opinion. I have a few reasons why. The more important reason is, even if Tesla proves me wrong and does well, I don't think it's going to do as good as several companies that I would rather put the money into. With Meta, I can't make that argument, because where I would move the money to, I think Meta is going to do just as good, and it'll stay in lockstep. I don't think Tesla's going to.
Yeah, it's that whole argument of every single day looking at your portfolio and saying, if you're not a buyer, you're a seller, right? And like, I know it's not, nobody's putting a gun to your head saying you have to sell every position you're not willing to buy at these valuations, but it's a fair question to be asking. And the answer could very easily be, hey, I understand this is not rational. I'm in love with the stock. I don't care what you say. I'm going to hold it anyways. And that's perfectly fine. It's your decision to make. I make it with certain names, but I'm just saying, what is that reason?
But you sound like you're on the fence with Tesla.
No, don't turn this around on Tesla. We're having a conversation around Palantir, because what I'm saying is you, all three of you are holders. All three of you have capitalized from, you know, the 10x that this stock has done over the past 3 years. And all three of you acknowledge that this is a crazy valuation and you've stolen gains from future years. Unless I misheard. But if you're all in that place, and if all three of you are not buyers at these prices, then what makes you holders at these prices?
So there's a range for me. Like there's a range that Palantir was in back in 2022, which is like, this is absolutely ridiculous as far as the pricing and valuation of this company. I'm going to go 90%. I should have gone 100% in, but I went 90. Good enough. My portfolio is a lot smaller. If it was like today, probably be like 50%, like right where Palantir is. As Palantir climbed, like part of that position was leaps, and they did very well. And of course, shares I didn't sell for the longest time. Last year, I did take some off the table. Sold my last 2 leaps that I thought that I was going to convert, but those are a small amount. But took some profits essentially beyond just the leaps. And so there was a range where I was like, if I didn't have Palantir and it wasn't already like a ridiculous amount of a portfolio, I would still be buying that. I was very comfortable. As a company grows, as a company executes, as they iterate, as that moat gets deeper, and it has, they've been killing it. There's a reason why they're up so much. That range has increased to the point now where I would not have considered this a year ago, but like seriously, if they fall to 55 and lower, I'm going to be slowly adding. The further down it gets, like if it falls to like 45, $40, I mean, there's a point where Palantir becomes 90% of my portfolio again, even though the multiples are there. But there's also a range where it's like, I'm not a buyer, and that's where we're at right now. And it's a fair value range or even above value range, but I'm not going to sell things based on, I think that this is fair or not. Like, take another stock, HIMS. I think fair value right now is $50. It's right there. Am I selling all of my HIMS right just because we hit my fair value? No, absolutely not. It's a stock I want to be in. It's a stock in a company that I want to be in the long term. Is there a price above 50 that I'm willing to sell 100% of my position? Yes, absolutely. And I'll take profits if this is a short squeeze and it runs up along the way. Palantir is the same way, where it's like it's above a valuation where I would be willing to pay for it at all. And I've sold some as a result of it. And at the further it gets up and away from my fair value range, I will take profits along the way if I see opportunities elsewhere. And I'm considering it right now, to be honest. But just because something is above my fair value and I'm not willing to pay for more of it doesn't mean that I'm going to sell it right then.
So I'm on the spectrum that 2022, we were on the max bearish view. Nobody wanted to own Palantir. And I feel like we are now maybe slightly over this hump, but I feel like we are now on the exact pendulum swing on the opposite side where nobody wants to sell this stock. I believe that we will revert eventually to the mean again, but I do believe that people are starting to actually see Palantir for what it is worth. And so right now, you might not necessarily see the potential and the scarcity of these shares. And especially now with the overvaluation, people might be saying, okay, let's get rid of it. But there will be a time in the near future where Palantir does start to ramp up buybacks and they will start to actually reduce the float. And it's obviously not going to be tomorrow or the next year or maybe even 2027. As we know, they've spent about $80 million in share buybacks to date and only bought back 2 million shares. We could talk a little bit more deep on that. But in the future, we will go from diluting 2% per annum or quarter, to really reducing the float by 0.5% or 1% every single year. And so by the time you get to a place where we're at 2.5 to 3 billion shares, we'll either stick to that 2.5, 3 billion shares or reduce to 2 billion shares outstanding. And at that point, it's going to be very difficult, especially with what we don't know, the additional customizable softwares that Palantir can kind of come up with. I mean, let's just take a brief second. I was working with Palantir when they were creating their first commercial product in 2016 and 2017. We are less than 9 years away. They've created, they've finished and rolled out PG, Project Gotham, to be commercial. Foundry, which is the product I was helping work with and still work with to this day. Apollo, Warp Speed, AIP. These are brand new softwares that just 9 years ago weren't even relevant. And we're still thinking about other opportunities throughout the rest of different industries and opportunities that will continue to be branded as their own software suite. And so what I mean, instead of having some sort of Microsoft Office suite that allows you to kind of create PowerPoints and it's you having to adhere to how you see or how you potentially work with an Excel, they will create a software or a platform that is from the ground up. And I don't think people fully comprehend that yet. But if you have so many different industries and so many different companies, you're able to sell that across an entire industry and create a customizable software. Why would you eventually continue to use something like Microsoft? And I don't necessarily think right now we see that. But in the future, I think you guys will actually see this happening. And I think that Shyam didn't necessarily just talk about SpaceX in the manufacturing aspect of things just off of a whim or an example. I think that there's more details than people really understand about how they understand how the iterations around space industry and manufacturing and everything that warp speed is truly about, that will play into the future of that sort of avenue and that particular software that can only go up. And I don't think that people truly understand as well the current mode that Palantir is in, which is literally just get as many customers through the door as possible. We'll find a way to charge them later. And I don't think that we've truly seen that S curve as of yet. And the last thing I will say is, yes, the net income growth, not necessarily the most impressive, but we have increased ops cash on a trailing 12-month basis by over 200% over the last 2 years. And between now and last year, it's doubled. And so my question is if we continue and that ops cash margin continues to grow to 40, 50%, maybe even 55%, and within several years, we grow at 30% until we get to about a $12 billion revenue by 2030, 2031. Whether that's real or not, I don't know, but you can easily start to see the price multiple for ops cash coming down to below 100, which obviously is still expensive in this particular case. And in my calculations, it's about 40x. It's still very expensive. But think about that's what the share count that we have today. That's what the products that we know about today. What products will they have in the future? What partnerships will they have in the future? And that's kind of where I'm like, well, I don't know what I don't know. And to me, I've been fortunate so far to get the share count that I have. And I believe in those guys that literally know way more about computers than I do. So I trust them with my steward of capitals. And why not invest in some of the smartest people that I've ever met? And that's the promise that I had when I met those guys back in 2016, 2017, the day they go public. And I upheld that promise. And I've quadrupled, almost quintupled my position since then. And they're still some of the smartest people I know. So why not put money where the smartest people are?
So let me sort of, because I don't disagree with that stance. I don't disagree with any of you guys. I'm just presenting the devil's advocate view, because I wanted to bring up this comment. I bookmarked it. To Matt's point, people definitely see what Palantir is worth, hence the valuation. In other words, Palantir today is being recognized for their potential, for their total addressable market expansion, for their accelerating revenue growth, for their impact with regards to AI. 3 years ago, nobody wanted to touch them with a 10-foot pole. It was in single-digit valuations. People didn't really trust that they would accelerate growth rates. I didn't really trust that they would accelerate growth rates, and they have. And now the new valuation is reflective of that. But it's interesting what Roy said around, he has a number in his mind for HIMSS. And so I guess what I want to bring up to the group is, with regards to the valuation, are you guys making excuses for Palantir? Because if you try to rewind time 3 years ago, and Palantir was at $9 or $8, and you said to yourself, okay, at that time, what is my number for I'm going to sell all my Palantir? Because if SoFi is at $6, I'm saying my number is going to be $60. But if SoFi is trading for $50, I'm going to say my number is $100. And it's always going to go like that until a point where it doesn't make sense anymore. And so now that you've captured, and I'm only saying this because you've captured the vast majority of those gains, and we've gone to prime time, we've gone to that place where this is now being recognized by the market. And there's a lot of execution risk that's baked into that because they have to grow into their valuations, whereas that was not the case 3 years ago. If you held Palantir at $8 and you had a number in your head, you said this is going to 15x in the next decade. I saw so many pieces of content on X, on YouTube around Palantir, $100 by 2030, all this. Well, guess what? It hit that number and it hit it 5 years early. So how can you now still have a number for Palantir when I would argue that for many of you, and I mean, if you're being intellectually honest, I think it's safe to admit that hey, a 10x, dude, if SoFi did a 10x in 2 years, I would probably sell SoFi. I might hold a token amount, but I wouldn't hold a massive amount, right? Because there's just the risk reward is is not fair. And
can I tell you when I knew Palantir was $100 stock?
Sure.
2021.
Okay, so like, okay, but what I'm trying to say is, Matt.
Let me ask, so I know it's $1 trillion company, right? Why would I sell it today?
No.
And another thing is you keep assuming that I'm going to sell the stock. Who says I'm going to sell anything?
Well, I mean, this is the point of
I
discussion.
mean, if you think about it in the long term, there could be dividends on the play, and in the plan, there could be so many different opportunities. I'll just be blunt here. If this doubles or quadruples a couple times, I mean, we're talking about a decent amount of money.
1,000%.
You add a percentage point or two. Do I actually really need to sell the stock?
No. Don't get me wrong. You can hold it for your whole life. I'm not saying that. I'm saying, like, if we agree that we want to capture the majority of the capital appreciation to say what is the best home for our money at any given point in time, and if you all agree that, hey, Palantir over the next 3 years will not be the best home from an ROI perspective because it's already done at 10x or 12x or whatever it's done, then that's all I'm saying. Is it a thought that crosses your mind of, hey, I want to trim, or hey, I want to sell a big chunk, or hey, I find more opportunities in NVIDIA or in whatever else, or if in something that's not as recognized, like HIMS, for example, right? It's still very small. So anyways.
So there's no wrong answer and there's no right answer. Everybody's different. And when it comes down to it, a 10x doesn't happen all the time. A lot of people never see a 10x.
Right.
So taking a profit at a 10x could be a great move for people. For me personally, I am willing to hold Palantir over the next 10 or 15 years. And if it dips to 50, I won't be mad because I'll still be up 400 or 500% on it, because I do think it's going to get to $1 trillion in 10 or 15 years from now. And I'm not willing to pay the taxes on that, because if I'm wrong, it's a losing proposition for me. So that chunk of money's already been allocated. I'm looking at it as an investment I've made, same as a rental property. The money's been allocated. I'm not touching it. No matter what happens, unless something changes with the business where I no longer think it is going to be up in my desired time frame, then I would sell it tomorrow. But the business is on fire. Regardless of how I feel about the valuation today, if it's still going to get to where I think it's going to get, there's still another 9 or 10x. So for me, there's no reason to sell it right now.
You have to be right twice, Tevis. And I can be
Only
right
need
once.
to be right once.
And right now, you're right. I'll have to be right once and just hold the damn stock.
I mean, look, guys, like if I say, let's take HIMS, right? If I say HIMS is at 40 and I say in 10 years, HIMS is going to do a 10x and go to 400. And if HIMS goes to 370 in 1 year, I'm an idiot for waiting 9 more years for me to capture the remaining 30. I can sell.
Well, if it goes to, that's the thing. If it goes to 370 and you're sitting there at 370 and you're saying, actually, I've reevaluated it and it's got the opportunity.
Okay. So that changes the game, because I didn't know that's what we were talking about. Because at the start of this pod,
if I reevaluate, I would sell it.
No. Hold on. At the beginning of this pod, what all of us were saying was it's too overvalued. I mean, like, how much higher do you think it can go? I guess is the next question.
If this was $1 trillion, the stock was worth $1 trillion today, with the knowledge that I know, I would have to sell it.
Same here, because that was my original consensus.
But what I'm saying is, back in 2021, with what I knew back in 2020, 2021, when this company went public, I knew it was $150 to $250 company. I've now learned, and products have been released: Apollo, AIP, Warp Speed, partnerships with the government, partnerships with the NHS, everything else that's gone on over the past 3 to 4 years.
Sure.
That went from 250 to $1 trillion. So yes, if the stock was back at $125 back in 2021, which it only got to $60, then I would have sold. But I thought it was going to be a $250 company. Now we're here, and now it's worth, to me personally, $1 trillion. And same thing with Rocket Lab. If Rocket Lab went to $150 billion market cap today, which is where I think the peak is, I would sell it.
$1 trillion by 2030, Matty?
It got to $1 trillion by 2030, and it hasn't nothing has changed between what it is today. Then yeah, I would sell Palantir. But you don't know. That's the thing, is something so much can happen between now and 2030. It could end up being, holy shit, this is going to brush up against what Google, Microsoft. You have to hear what I'm saying. Microsoft's a $3 trillion company. If I think that it's going to potentially rival. Now, Microsoft has other things like the cloud business, the gaming business. So you can't just say like for like, it's going to be a $3 trillion business, because Palantir and Microsoft aren't in the entirely same businesses. But if you're looking at enterprise software versus enterprise software, I think it's $1 trillion business easily for Palantir.
So let me ask you this: do you have a time frame for that $1 trillion? Is it 2030?
Today, if it was $1 trillion today, I would sell it. Okay, you're asking me something in 2030. If it was $1 trillion in 2030, it could be a completely different company. I don't know.
Got it. Okay, so today,
same thing with HIMS, right? If HIMS comes out and it 100, you guys had a great conversation today about it 100% return of revenue. Sorry, not 100% return, 100% gain in revenue over the last 12 months. Well, you might think it's slowing down, going to 20, 30, 40%. But if it continues at 100% for several years, it's a different company than you thought.
Yeah.
It's hard to say. I mean, you kind of have to. If I think it's worth $1 trillion today, and we get to that place today, then I would say yes, I would take my profits and run. But you can't be like, oh yeah, by the way, 10 years from now, it's $1 trillion now. Are you selling? It's like, I would have to evaluate what I think it is in 10 years from now.
The other part of this too is, like, if Palantir as a business had not done what they did, that they were still, growing at like 23% year over year or something like that. There was a lot of talk, but not a lot of execution, and it was trading at where it is today. I'd have a very small, I would have sold more Palantir. I would just say that, because we'd be looking at, a lot. It's still expensive either way that you put it, but there's a fundamental execution. And so what that does is it gives me the confidence of that they'll continue to iterate, they'll continue to accelerate, they're executing at a high level, like the quality of the company. B, a lot of people that are bearish on Palantir, and none of us are here are on the business, just on the valuation side. But they think, oh, Palantir is like a $10 stock, which is like the dumbest thing ever. Or like it's going to go back to $20 or $30. 40, I mean, like if there's terrible macro stuff, maybe, but I'm going to own a lot of Palantir if that happens. Could it get cut in half? Yeah, I wouldn't blink an eye if it gets cut in half. But there's basically a floor there versus like if it was just a classic short squeeze, like AMC, GameStop back in the day, HIMS, there was fundamental reason why they squeezed, but those, when they're going up like that, you don't have that confidence of, oh, but it'll settle at this range and just kind of trade in a range like what Steve was saying, which I think is plausible. Like it's going to be range bound for a while, even while they just kill it as a company. So I'm good holding in that scenario versus like if it pops up for no reason at $250 next week, I'll be like, thank you for the gains.
Look, a prime example of this.
Range bands, because a lot of people are not selling. And I just don't think there's enough people willing to sell if it goes down to 80 to make it keep going down or get past that 70 level. If this was a different company, I would say it could easily get back to 40 or 50. And while I think that's where the fair value is, I just don't think there's going to be enough sellers to get it there.
It's going to be the same, like the first quarter where they don't post accelerating growth, and it's going to happen. It can't keep accelerating, to infinity. It's going to have a massive sell-off. Now, whether that happens at 100 or 150 or 200 or 300, I don't know. Whenever that quarter comes, when growth starts to plateau, this thing's going to drop off 20% off a cliff.
Mm-hmm. So using your example again, that Tavis, and hopefully this comes home, and I hope I'm not beating a dead horse here. RKLB is a prime example of this. If they do not get a Neutron launch, their medium launch vehicle, then the stock will, in my opinion, be stuck at never exceeding $25 billion market cap. But not only have they announced the Neutron vehicle, if they are successful in that, in my opinion, $75 billion on the table, maybe $100 billion. But they also announced that they're going to try to compete, creating their own constellation, whether that is to compete directly with Starlink, AST Space Mobile, Amazon's Kuiper, legitimately internet from space, and having the ability to have direct connection satellites with your cell phone and being able to get internet or connection anywhere remotely in the world, that on its own could be a $50 to $100 billion business. So if that's successful, and they just announced that last quarter, right? We knew that was something that was potential, but if they execute it, then the market cap potential of that company has now gone from Matt potentially selling at 25 billion to now it potentially being a $200 billion company.
1,000%.
So that's what I'm trying to say. I mean, between now and in 3 years from now, the point at which I would want to sell could vary drastically.
That's totally fair, Matt. And look, the reward is inevitably going to be linked to the risk. For Rocket Lab, for example, it's relatively obscure in the grand scheme of things. I mean, we sort of live in our little FinTwit bubble that we know what's going on with Rocket Lab because people, cover it. But in the grand scheme of things, when things hit prime time, that's the sell the news time. And I'm not saying this to be a bear. I'm saying it to present a counterpoint because I'm your friend. And if I had a stock that went up 10x or 15x, I would want you to sort of say the same arguments to me and see how well I rebuttal them, because I want to make sure that, okay, I'm on a hot streak right now. Do I really believe, and is there a tangible reason for me to believe that this hot streak is going to continue? Because every single day that I'm holding this at this valuation carries more risk than I was holding it at $50 or at $10. And you could say, Tevis, screw off because you sold this at $18. Your opinion is invalidated. Guys, I would buy this hand over fist today. Even me, at $40 or $50. Why? Because it's growing at 40%. And when I sold it, it was growing at 13%. It's a different growth profile. I understand. What I'm saying is there's been a lot of gains. And right now, it's every single day is a question of, do I believe in the story as of today for the next X years or not? Right? Regardless of what your past performance has been. And it sounds like, at least for you, Matt, the answer is yes, because the point at which Matt would sell everything is $1 trillion and Palantir is only 250 right now. And with the prospects that they have and the projects and the revenue growth, that you believe that there's still a lot of meat left on the bone for growth. And that's fine. I'm just asking the questions.
Travis, can you share my screen? I want to show 3 charts.
And right after this, guys, let's pivot to Rocket Lab. Matt, if you want to just kind of show us what you're looking at, what you're thinking, just overall thoughts during earnings.
So I put these out on Seeking Alpha today, my Palantir article. And this is what makes me not want to sell, even though I think the valuation is super high. And keep in mind, I'm up 29.5x on Meta, and I'm still not selling. I held it for over a decade because I think there's still meat on the bone. Their total customer count continues to go up. Now, where that translating deals is huge because they are still, for the past 3 quarters, generating record $1 million plus deals. And that has a huge compound effect when you think about 124% net dollar retention. And the fact that they're getting such large $5 and $10 million contracts from a numbers perspective makes me think that what we're currently seeing on the blue line, which is revenue, you're starting to see an S-curve form on the quarterly revenue. And at 124% net dollar retention on all those contracts that are just happening, that doesn't take into consideration anything that was done the past 12 months. The amount of contracts that they've done in the past year has grown something like 40, 50%. So we could see next year at this time a huge jump on revenue because all those contracts that they solidified make it upsold on other features. And that's why Palantir could have exponential growth on the revenue. And once again, you use that formula going out another year or two with them continue to compound more contracts. And if they can keep net dollar retention 124%, they could beat estimates by a lot on revenue. My fear is the share dilution and that type of stuff. But I think, as Matt said, the OPEX margins and everything are looking pretty good. I think this is something where this can certainly grow into the valuation that it has today. I just think it's going to take a long time to get there, and I think it can surpass it. And I don't need to be right twice. I was already right once, so I don't need to sell just to try to shave 10 or 20 bucks off my share price where it is today.
Yeah, that's very fair. But I think, like, again, I would probably frame it as, you know, a relative of yours who doesn't own a single share of Palantir wants to buy Palantir. I literally had my aunt, man, the same aunt that I've told you guys about, you know, who buys hymns and degens into things. She was like, have you heard about this Palantir thing? She like read a random Seeking Alpha article or whatever, probably Steve. And she asked me if she should buy. And I was like, no, don't buy it, because there's risk associated. Now, she could have lost money. She could have missed out on money as a result of me. But if you had a relative and they want to buy Palantir and they didn't own a single share, would you tell them to buy at this price? Or what would be that caveat? You'd probably say buy only if you plan on holding for the next 10 years or something like that, right? And now what I'm asking you is, do those same rules apply to you guys? Like, if you're buying today or if you're not selling today, you're not going to sell in 2 years or in 5 years or in 7 years.
I tell most people to buy the S&P 500.
Yep. I do the same thing, with rare exception. You know, if somebody asks me about a specific company, I'll share what I'm thinking. Funnily enough, I was in a meeting yesterday and somebody mentioned Robinhood as a stock, unrelated to stocks, investing, anything. So I was like, oh, yeah, I know that company. But yeah, S&P 500, basically, like, we're not financial advisors. If I'm super close to somebody and I kind of know what their risk levels and everything are, I'm not going to suggest whether buy or sell. Yeah, essentially that. But I'll be more prone to, like, they're like, hey, what stocks are you looking at? Well, you can look at my Twitter or whatever. But, you know, in essence, like, these stocks I think are opportunities. Well, what about Palantir? It's like, yeah, great company, love it, own a lot of it. I wouldn't buy it here. And I'll just tell them what I'm doing, knowing I'm willing to lose my own money a lot more than make a recommendation other than S&P 500, because that's just betting on America, and they lose money, even if I think that they can afford it. So I'm just very hesitant on that. But, you know, like, fair point. Like, my wife and daughter started a joint account on Robinhood, just a little bit of money in there. They're like, we want you to invest it aggressively. And I did not buy Palantir. I bought HIMS. It's a small amount, though, guys. It's like $100.
Yeah, people are asking me, like, I think they're drawing parallels for me with SoFi, and they're asking me, like, whether I'd ever sell 100% of my SoFi to get into HIMS. And I'm like, yeah, like, if SoFi was at, like, the reason I'm continuing to buy SoFi right now is because I think it's undervalued and it has potential to grow relative to what it should be worth. But if SoFi was at $60 right now and HIMS is at $20, obviously I'm selling all my SoFi and buying HIMS. It's just, that's where I think the better opportunity for me to earn a higher reward is. And so that's why I'm, like, posing the same question to you guys. Like, Roy is in HIMS. Roy is bullish on HIMS. Roy thinks there's a long runway for HIMS. Roy's made a lot of money on Palantir. So anyways, you guys sort of answered it, and it's more of a, I guess, trader mentality that I'm catering to, and you guys are thinking more long-term. Like, just because something's gone up doesn't mean I have to sell it. Both are fair. I'm just asking the questions.
How about Rocket Lab?
It's going to zero.
Yeah. So earnings are coming up. Any big things that you're looking at in specific, Matt? And it's a company will be profitable later this year, I'm guessing. I'm curious on that. And, like, with a company like that, where it's pre EPS positive, like, there's a degree of speculation. I think it's a lot less speculative now than it was 2 years ago. You identified it early. You've made a killing on it. Like, what are you looking at now, just like for confirmation? And what level of detail do you go over the earnings of a company like that versus perhaps when you were early in the story or even later in the story and you're looking for an exit?
So it definitely has become less speculative, right? And I think now that they've gotten a little bit more of a business under themselves, the space systems revenues has kind of started to grow and mature a little bit. It definitely has gone from, okay, this is a speculation, to now, like you stated, headed towards profitability. I would like to update. It's not necessarily this year where I see them being profitable. I think it would probably be the middle of next year, maybe the second or third quarter. What I am cautiously optimistic for, though, is them being ops cash positive under underlying businesses. So meaning that the gross profit is enough that from a basically cost of goods sold and the underlying piece about just funding that initial space systems and electron business actually goes positive. They only lost $2.5 million last quarter, which is a huge improvement. And so with the increase in potential revenue, I think that either this quarter or next, we could potentially see that underlying business actually show positive ops cash. Unfortunately, because you have this drag of the Neutron business really still being in its infancy and have yet to launch something, you do have that $20 to $30 million drag on a quarterly basis. So that, unfortunately, until that gets off and up and running, or you have growth in the electron or space systems business to offset that $20 to $30 million drag, it's not going to be positive until then. Me looking at specifically if they give any updates with respect to the progress on Neutron, they stated that, I think everyone was kind of expecting it to be kind of launching within the next 6-7 weeks or so. Unfortunately, it's still a space product, and with that generally comes delays. So I think this is probably going to be more in the late 3Q, early 4Q launch. I'm hoping that they give some progress updates on that. There's been a lot of discussion since that was not allowed to be, there's been a lot of contracts since the end of the year that have not been allowed to be fully itemized into the backlog. So in the fiscal year report that we saw in February timeframe, they closed the backlog at about $1.1 billion. Obviously, they're running right now at north of $400 million a year in revenue. So really, they're chomping at the bit to be able to hopefully increase that backlog. Obviously, you only have 2.5 years worth of backlog. My hope is, with all the announcements that they've had since the beginning of the year, they're able to get closer to $1.5 billion. And so hopefully that gives them a little bit more running room. That also, I'd like to see, there's some key contracts that I want to hear more about. The Kratos contract. The Kratos is doing hypersonic testing within the United States. They've also announced something which I don't expect to see in the backlog, but a partnership which I believe is going to grow not only specifically in terms of hypersonics testing with the UK, but also Australia. And there's a November 2024 alliance basically between the United States, UK, and Australia that demonstrate the potential for hypersonic test communication and programs. So I think that Rocket Lab is probably the number one poised company to take advantage of that. And not only that, but if you include, let's just say, all of our NATO allies within that, the the European Union and everybody over there doesn't have any sort of real hypersonic testbed capability. And so when you're talking about golden domes for the United States, you're potentially talking about golden domes for Europe and being able to use some sort of defense system. Rocket Lab would feed into that. HASTE, the Rocket Lab component, is not meant to be some sort of offensive vehicle. It's more of a defensive vehicle. So there's that. So you have multiple revenue streams that are really starting to kind of come in. So HASTE, Neutron, and then obviously they noted in the last quarterly guidance update that the constellation piece. But the things I'm looking for most specifically, if they can give any updates on Neutron, how much closer is it to getting to the pad? Because once you actually see it on the pad and it's integrated, they wet test it, they fill it with fuel, etc. I think you're 2 to 3 months out from actually seeing the first launch. So if they give an update on when they think that is going to be, that might give you a little bit more confidence that we're going to see a launch this year. Then the update in the backlog is the big thing, and I really want to see how close we can get from an ops cash perspective, close to break even, if not see $1 million in profit. That would be really good to see that underlying business really pull through, because it's growing, and I don't expect revenue to grow massively over the next couple quarters. I think that there's a lot of lull between now and when we get Neutron off the ground. So if we're able to get closer to $150 million quarters by the end of the year, I'd be ecstatic. But I'm not really expecting some sort of massive growth. In fact, I think sequential quarter, we might be down a couple percentage points, either flat to 6% down. But year over year, it's still up massively. I don't have the numbers in front of me, but I can pull them really quick. But let me just pull it up, actually. It's Year over year, the growth should be about 45%. So even though it'll be down for 6 to 0, sorry, it'll be flat or down 6% quarter over quarter, it'll be up still 45% year over year. So pretty impressive in that respect. And hopefully that continues throughout the rest of the year.
Yeah, with their new product line, like it seems like Rocket Lab, and correct me if wrong, that'll kind of be flat, growing a little bit revenue, and sometimes up, sometimes down. Launch a new product line, and then huge spike, and then flat. Not all the time, but I mean, it's lumpy. It's not like a Palantir. It's not like a Salesforce. It's early stage. Is that a fair take? I also had another question, Matt, on Rocket Lab. Palantir is like this too. Rocket Lab is one of those companies that I look at, and I don't see any meaningful impact from tariffs and a global trade war. I know that they're in Australia, but I know that the trade war can impact a lot of countries, not just the United States. Is that a fair assessment, or is there some headwind from the current tariffs and also a potential global trade war?
There is there are several of their manufacturing plants that actually are in Canada. So there might be some tariff impacts associated with that. But the majority of the work is done in Long Beach, Albuquerque, New Mexico. A lot of the work that's going on right now is in the eastern part of the U.S. as well. So in that respect, you have a lot of work going on within the continental United States. They also have separate things going on in New Zealand as well. So for people that aren't familiar, Rocket Lab has 2 launch facilities, one in Wallops, Virginia, Wallops Island, Virginia, and that launches mostly their HASTE vehicles, but they've launched, I believe, also some Electron vehicles there. And then they also have their New Zealand launch facility, which has 2 pads. And that's the only U.S. company that has an external U.S. launch facility. And we've also talked with my conversations with the CEOs, CEO Peter and the CFO Adam. They are looking into potentially expanding the international launch capability of Rocket Lab, and I anticipate that has a lot to do with HASTE. But you never know.
Yeah, I just looked it up. I'm like, Australia didn't sound right. Is New Zealand where it's founded? So, and
Yep.
they're headquartered, and I actually didn't realize this. I knew that they were a U.S. company as far as being publicly traded, but headquartered in California. So I guess they're technically
Long
an American
Beach.
company. So thanks for the correction, Matt.
Okay, so we are at an hour 20. At what point do we want to start questions?
I want to just, I think maybe in like 10-ish minutes, I want to kick out something that I thought was kind of interesting, and it does involve Google to a certain extent, websites in general, and PayPal. So PayPal, people wrote it off for dead. The stock certainly has been. And there's a play just from turnaround stuff, but what they're building is a commerce platform. And part of what's been really interesting is they're not just pumping AI and saying AI a million times to try to pump the stock, because this isn't 2023. That would not work at all. But they're hosting developer days. They're talking and launching AI products, AI agents quite a bit. And they're talking about those next things that they're working on. And one of those trends that I thought was really interesting, and I hadn't thought about it much, and it's more than just PayPal. Like today was the first day it meaningfully clicked. It's kind of last night too. AI agents, they've been talked about really for about 6 months, and the talk has continued to increase. If you look at like earnings calls, transcripts, companies, products, it's not just AI companies that are talking about it either. And there's a lot more work to be done in that. But there's a lot of different kind of AI agents. There's customer service agents. Watch NVIDIA's, I don't remember what they called it, but a couple months ago, Jensen did a great job of breaking that down. What PayPal is working on, and they're partnered with Anthropic and Claude, and they've launched some of these internal bots for developers and for people that have PayPal products and stuff, and that's all well and good. But is AI agents that are basically shopping agents for you, that you basically through natural language prompts, rather than go on Google or go on Amazon, although I'm sure that you still would, especially initially. what happens over time, like if somebody has a lot of wealth, they want the best products. They still do care about the price and delivery and all that stuff, but you tend to happen that you don't shop for yourself that much anymore, but instead you have a personal shopper that goes out and gets things that fit you and match you as far as their wardrobe. You know, on a lesser extent for people that don't have as much, such as myself, you know, there's Instacart and those sort of things that work for groceries, and you know, Amazon does a little bit of this too, but what they perceive as a future where AI agents are fairly common, and that there's AI shopping agents specifically that know you quite well because PayPal has your data. They know your pant size, they know your shoes, they know your preferences, they know where you live, they know how you want to pay, and you've trusted them with that data. And so you basically go onto the PayPal app and you're like, hey, I want some pants, you know, this kind of pants, and I want, you know, to match this kind of shoe, and what you got. And it knows the brands you like. So it may be like, okay, you've shopped at this place before, so they got a special on this kind of thing. And using Honey, that's there internally in PayPal, are like, they got a 5% off coupon. Actually, if you buy 2 pairs, how about you do this pair of pants and this pair of pants? And you're like, yeah, that's great. Okay, any changes as far as your size or anything? I'm like, nope. Okay, great. So if that's good to go, it looks like that they also have shoes that would work out and look nice to you. Do you want the shoes? No. Okay. All right. Address and payment method the same. Yep. Okay. There you go. It'll be delivered such and such. Do you want me to send you some tracking updates when it comes time for that? Yeah. And you're done. You don't have to go on. In Amazon's not annoying. I don't think Amazon's in danger here, but like Google is one of those where you go and you're not looking at Amazon for whatever reason. eBay's kind of dead-ish, but I think it's going to be, and it may take several years, fairly common to have that kind of integration as far as AI agents. And so what that does, not just as far as shopping agents, but there's a lot of these type of things that can, you know, schedule, and other companies have talked about this too, schedule, you know, tickets at the opera and get those seats for you, or end up, you know, reserving the at a nice restaurant. And so you are basically no longer going to websites in that scenario, or at least less. Instead, you're using LLMs already to replace a little bit of searching, and you're also using AI agents to schedule and do things for you. And it has a couple of headwinds against companies like Google, because of course search, and a lot of their revenue is not the meaningless search that LLM is replacing, but the monetary search where people are looking for products, and also on websites. So there's a lot of advertisement on websites and around website and website traffic, and I could see that potentially get disruptive. So I'm not saying like, hey, this is PayPal's game that's a winner take all. It's not. There's going to be a lot of winners, but I'm kind of curious. Like, what do you think about that trend? Is that real? Is that meaningful? Is that a headwind for Google? And I think Google is, I'm still neutral, and I think there's a lot of good things going for it too. But I've just started thinking of this, so I'm sure there's things I'm overlooking and simplifying.
So I have sort of like 3 conclusions just from listening to that. The first is, I think AI is going to unlock a lot of automation, and a lot of automation is going to be resurfaced under the guise of AI. Automation has been around for a while. AI just adds a level of intelligence to it, which is to say, okay, get me a pair of jeans. And it doesn't ask you whether it's like, you know, do you want black jeans, blue jeans, you know, light blue jeans, or whatever, khakis. It just knows what you like, and then can go and has a very large library for context that it can pull from. I think the thing is that a lot of people, and like, this is time savings, this is headache savings, but like, the thing that I can't wrap my head around is like, a lot of people don't have that much going on in their lives. You know, like, they don't have all of these like passion projects and working multiple jobs. And like, to a lot of people, driving their own car through traffic is a problem that like, oh, thank God AI is here to solve it for me, and we can do self-driving cars. But driving their own car down a country road or during a road trip, like, that's fun. Shopping for pants is fun to a lot of people. For me, it's like literally like, you know, the 7 rungs of hell all together. But for a lot of people, it's fun. It's like an activity that they can do. And so I do think it's going to be a tool that it's going to have its own hype wave to start because AI, and oh my gosh, this is so fascinating, and there's going to be like a level of curiosity, but then it's going to die down because like people are still going to be people and do whatever they do. The second thing that it's interesting, Roy, is that I think it's going to aggregate a lot of brands. And I think a lot of brands are going to see a sustained decline in people that use this. Because if I say, get me a pair of white shoes on Amazon or get me a pair of blue jeans, I'm not saying, hey, I want, Lacoste versus Nike versus Pumas versus whatever. I'm just saying white shoes. And it's going to go and it's going to pick whatever it thinks is the best fit for me. Maybe go by customer reviews. And maybe I get some brand I've never heard of before. Maybe I get some generic no-name brand. Maybe I get, the top of the line thing, or maybe I get a $20 pair of shoes. The point is if I went to the store, I can judge, I can feel, I can touch, I can, try on all of these products, and I'll go buy designer brands. I'll go buy high-end things. If I ask the AI, like, hey, get me get me a carton of eggs. Is it like free range? Is it brown eggs? Is it, what are the parameters? I think a lot of people are not going to say like, hey, get me this that has to be this specific dimensions, this specific criteria, this specific fabric, this specific, designer, this specific store. They're just going to say, get me freaking pants. And so I think there's an opportunity there for whoever the aggregator is, in this case, it'll be PayPal, to make some money off the back end of that, to say, okay, well, if you want all the traffic for every query that comes in for pants to go through your, provider versus somebody else's, you got to pay us a cut. And so it becomes like a search engine of sorts where the highest results float to the top, and the results at the top get the most amount of clicks, a disproportionate amount. So I think that's also going to be interesting, because what Amazon taught us is it democratized, shopping to some degree. And I hate using that term, but it's true, because Amazon broke down all of the perceived value of brands. Because if I'm buying, I don't know, a pair of pants, I don't care that they're Calvin Klein pants or that they're whatever pants. I just go by the customer reviews. What's 4.5 stars and above, and that's my filter. And if it's some random like brand out of Vietnam or China or whatever, if it's 4.5 stars, I trust in the consensus aggregate taste of the market. And so that's what I mean by democratized. And I think AI is going to be an acceleration and an extension of that, where the market of, hey, 20,000 people have ordered these types of pants and 5,000 people have ordered these types of pants. If I tell the AI, give me a set of pants, it's probably going to go to the 20,000 one and continue that route. So I don't know. Those are just raw thoughts, but it's going to be interesting. It's going to change trends.
Yeah. Matt, Steve, you guys have any thoughts on that trend? Do you think that's legit? Do you think it's overstated, not going to happen, way further out there?
I'm not smart enough.
Okay.
It's not something I think is going to move the needle at all. Look, maybe I'm wrong, but I don't know that I can see a reason why people would be excited about full self-driving, because it's something that I want, so I can do other things instead of paying attention and driving. I can do emails. I can work. Even though I make work calls on my way home when I'm driving, it'll allow me to answer text messages and do emails and be more efficient. But how hard is it really to buy clothes? It doesn't take that much time. Everybody knows what I wear the same brand of everything pretty much. I just order more of the same stuff. It takes all 5 minutes. I don't think that's going to be a needle mover. I think what PayPal needs to focus on is the fact that nobody cares about their buybacks, and they should take $3 billion of that $6 billion and start a dividend program, because they'll have over a 4% yield right off the bat. And they'll open it up to so many more investors and ETFs that I think it'll actually move.
Yeah, that's near term. This stuff that we're talking about are like further term trends. That's more like 3-4 years out, where you'd see meaningful revenue, meaningful data moving. And it's not clear if they'll execute that, if they'll get adoption. But I see it as a pretty viable trend, and what they're building. And I don't think it was intentional. Like because a lot of this actually happened under Dan Schulman, like they have, or they're building at least, the AI shopping agents that now have access to coupons through Honey, that they also benefit through advertising, because basically what they're doing is a differentiated form of advertising. It's not reliant on website advertising specifically, both on the PayPal app and outside of it as well. And of course, the stable coins is another major trend that's out there. It's not related to this, but just PayPal, like for the first time in a while, doesn't seem like that they're like doing things that are people like, oh, that's great that they're doing this. They should have done that 5 years ago. They're actually like seeing trends ahead of time and iterating on it and building it. Will it work? We'll see. But I was thinking of it as larger than just PayPal, like the idea that not the website is dead. I mean, that's hyperbole, but I do see a headwind against its websites from how AI is probably going to be implemented and continue to grow. And it's something that, as far as the ramifications, I've not really thought about or considered. So it's interesting.
If they can build an advertising platform to generate revenue from, sure. But I don't think people are going to look for personal shoppers to not shop on their own. That's just me.
Q&A time, guys?
Yes. Okay. So I'll ask this first because it's the most interesting question in my mind. Matthew, thoughts on SoFi? You go ahead.
I was going to say, I think SoFi is a great company. I think they're going to do really well. But I sold in the $16 range. And the reason being is, while I think it's a phenomenal company, and I think people that are holding it as shareholders will continue to do well, and while I do think the company is undervalued, my thought process was that they would embrace technology a little bit more. And I'm also slightly disgruntled by the fact that they have yet to have an investor day for several years at this point. And all I keep hearing is just wait for what? I mean, there's no investor day. So, and nor is there one scheduled. And so I thought it was pretty funny when people were starting to poke fun at Noto, and he finally clapped back on somebody's post, and he wrote some TLDR big block of text basically saying, you guys have no idea what's in the works and blah, blah, blah. It's just like, all right, so just more all talk and no actual credit to actually delivering some of these things. It's like, I get it. Like, Noto is a phenomenal traditional banker and he's had a great career. But to me, I think he's getting eaten alive by what Robinhood and several other fintech companies are really starting to put out there. It's not to say that the revenues and the EPS that's being generated out of SoFi should be devalued, but I think that what SoFi could be doing if they leverage their technology platforms could be way better. And it kind of makes me scratch my head. I could potentially be coerced into reigniting my belief as a bull within SoFi if they embrace that. They have an investor day, they show a roadmap, but I'm not going to invest in some company that the CEO just says keep waiting. Right. I don't have the experience of using SoFi or their products to really get me ignited in terms of what they're doing from a technology standpoint. And because of that, I view it as just a bank, and that's not a problem. People will do well with the stock, but I just have other opportunities, and I've done well with my investments since I've sold.
Okay, that's a great answer. Do any of you ever buy super speculative stocks? You must be new to this channel. If not, how do you refrain from trying to catch a 5 to 10x or bust?
Yeah, I'll start. My stocks are less speculative now. My portfolio has done well, so it's larger, and I tend to make less speculative bets. I do sometimes. For instance, I was an upseller. I did sell out of it. Just because I was like, hey, this is a wait and see play. PayPal is too. I'd rather just be in PayPal more. But I limited myself to a 1% allocation on that. It's a biotech stock. It's one that could do extremely well, like literally essentially cure cancer. But it could also go to zero, although not quickly, not right away. Probably it's going to be somewhere in between that. So I don't mind taking that with a few small speculative bets, but there's a real danger in that, especially if you're not like if you have done your DD and you're like, no, this is an amazing opportunity. That's where I was with Palantir back in 2022. But if it's just like, hey, this seems cheap, it seems like it could be good, you do that a lot of times, and you're probably going to have a lot of those go to zero. And it could actually be a lot worse than buying something like, let's say, NVIDIA. NVIDIA is cheap by most metrics. Is there some downside risk short term? Sure. But if you invest in high quality companies that are less speculative with most of your assets, you're going to probably outperform yourself by quite a bit versus allocating too much to speculative stocks. But hey, like, you do you. If that's your style and it works for you, then do
it. Matt or Steve, any thoughts on this one before we move on?
Yeah, I mean, I could say, I mean, I often look at opportunities. Rocket Lab was a speculative bet not too long ago, in my opinion, and some people might still consider it a speculative bet. But I think you have to do a balance of the risk versus return of and not risking capital that you can't afford to lose. I also have to think about there's multiple ways that you can invest. There's the easy way where you basically invest for 30 years, try to invest 15 to 20% of your income into a safe index fund, or you try to swing yourself out of the park. One's guaranteed, one is not. And so I guess maybe you couldn't say both are not guaranteed, but one is generally high likelihood of success. The other one is not. And so it really just depends upon what your risk tolerance is for that. And also, another thing that I like to keep in mind with people is there's 3,600 different companies, 4,000 different companies out there that you can choose from. That, who's to say that you're going to pick the right one? And another piece of it is are you actually putting in the true due diligence and rigor around, what you're looking into? Or are you just saying, oh, this guy at the water cooler said that this company might blow up? Well, you might get lucky. That company might actually do well. But the majority of the time, the people around the water cooler spend maybe 5 minutes every 6 months looking at stocks online. And it's mostly like Motley Fool or some other gimmick sort of company that tries to feed you super speculative companies. And next thing you know, your investment blows up, right? So just take into an example, what potentially you're looking at, what the potential growth of it could be, and also set yourself for key milestones as to, hey, if this actually doesn't show up as I think it is, I need to get out, right? Especially if it's super speculative. For example, if the Electron rocket had the same sort of fate as the Astra rockets did, where they launched 4 different rockets and they kept not really getting to orbit, I would have sold out of Rocket Lab. I used to have an investment position in Virgin Galactic when space was really starting to kick off back in 2019, 2020. And I was just like, you know what? This is not what I was expecting. They are not going down the path. They are not meeting their objectives. So I sold it. And what did I put that money into? I put more of that money into Rocket Lab. So, you really have to think about, specifically if you're looking at speculative, maybe not necessarily investing in one company, but if there's multiple companies in the same moat, and really taking an idea, learn about something, invest money that you can afford to lose. And as you learn more, either cut the ones that are bullshit and not actually meeting expectations and double down into the ones that are actually doing well. And hopefully over time, you'll find one that actually matches your expectations. That's more so investing in new sectors, new business ventures, new industries that haven't really been fully established yet, but that might be more on the same.
Yeah. Cool. Let's move on. Thoughts on Lemonade increasing in-force premium whilst OPEX staying steady. management said it wouldn't be unexpected if each employee is managing 4 million premiums. Yeah, I know they reported earnings today. I haven't really had a chance, Gurj, to take a look at the earnings. I know the earnings were positive. The stock was trading up in the morning. I just it's been a crazy day, so I haven't had a chance to take a look at the report yet. I don't know, Roy, if you have.
No, I don't follow that one.
I know nobody else on this call is in Lemonade, so I will take a look at some point or another. I know Paper Bag Investing made a video. I haven't seen that either. All the free time I've had today has been on streams with you guys. This is like my 4th hour today on camera. So yeah, sorry about that. Any thought on nuclear energy plays, since the future is AI that needs efficient energy to run? Nuclear energy.
It's, I mean, I am personally thinking that pretty much every energy space is going to benefit, some more so than others. Nuclear, we should have already built that out as far as infrastructure in the United States, especially in the Midwest. But we stopped, and a lot of that was fears related to Chernobyl and a few other things too. And I think that we're past that, but there's still some not in my backyard type mentality as it relates to those, and still a lot of regulation that's against that, slowing it down. I do see that that's an industry that looks like it is heating up rather than melting down, and pun intended there. But it's slow. You cannot just say, okay, let's throw up a nuclear reactor here in the next 3 months. It's a multiple year thing. So a lot of the companies that are tangential to that as well will benefit, from like a one-time run up, and then just kind of have to wait until those new reactors are built. And the way that this has worked in the past, there have been times in the past, and I'd have to look back at this, it's been a while, but I've got a relative that works in a nuclear power plant, where they've kind of like the Keystone Pipeline, where they've begin building out things, all the permits and everything are good to go, and then Greenpeace or a lot of other things happen and come in and basically get it shut down, or somebody gets voted out that was key, and then they change, and it's tough. It's irrational, but it's tough. So, but we do need more energy.
I think it's a tough one, right? There's so much red tape on nuclear. I think there's been a resurgence. I think obviously the last 20 or 30 years, there's been not too many. There's been a few plants built, but it was really a big thing back in the 70s and maybe early 80s. But after Chernobyl and 3 Mile Island,
yeah,
and even more so with Fukushima back in 2012, all of Europe except for France has really turned against nuclear. Shout out to France. I think they're doing the right thing by keeping a lot of their nuclear up and running.
Yes.
But yeah, I mean, I'm bullish on nuclear, but the problem is the wavelength, like you stated, Roy, and the red tape. I mean, it takes a decade or more, even after you get approved to build a nuclear plant. So it's tough, and you'd have to have a long time horizon and get in early. And how much can you actually do that, and what kind of stocks are actually being set up to do something like that? The SMR space is interesting, but I can't speak too much on that. And a lot of times from what I've seen so far is that a lot of them have been kind of like a lot of talk, but not actually getting things done. And so until we see some movement and actual progress in that space, it's speculative. And so I would once again think about, if you're interested in the SMR space, really look at investing in multiple different companies, but keeping a very frequent eye on the progress and what's actually happening from a regulatory standpoint and how they're actually progressing, because it could be something where it ends up flopping. I mean, people have been talking about SMRs for decades.
I mean, you could just go indirectly and just invest in Southern Company or NextEra.
I frequently look into NextEra when I believe it's cheap. I think NextEra is a great one.
All right. I think we're only going to have time for maybe one more question or maybe two, because I really want to hard cap it in 10 minutes to go to the gym. All are you all humble enough to recognize the luck involved in landing 10x plus companies? If so, would you be selling most of your positions being up 15x plus? Maybe we skip this because we already had a discussion on it, but I don't know.
Yeah, I mean, there's luck involved, but there's also skill, and part of the skill is just identifying quality companies and holding them over the long term.
And I think the best question to end off, and I'm sorry if we didn't get to your question, best question to end off, because this will absolutely take us another 10 minutes. Question for Steve, Amazon or Meta? Why?
Meta over Amazon.
Why?
Because Amazon has more competition than Meta. Both great companies. I would hold both companies until I can't hold them anymore. But who's Meta's competition versus who's Amazon's competition? So Amazon on e-commerce for their businesses, you still have Walmart that does more revenue, and they're physical retail with some e-commerce. You got Costco, you got Target. I mean, they have real competitors in that space. On cloud, they have Alphabet and Microsoft that have open checkbooks that can spend whatever they want to spend. Google Cloud grew 28% year over year. So they have real competition. Meta has no competition. They have more than a third of the global population utilizing their platforms. They haven't even begun to monetize WhatsApp yet. And Zuckerberg is hell-bent on AR and VR.
Yeah.
And where that comes in is he hates, and I would even go as far as saying he despises having to pay Apple and Alphabet a VIG with their app store. And he will not let that happen again. And if he is correct that AR and VR is the next computing platform, and if he's correct with these glasses being the next big thing, he's going to own the entire ecosystem. There's nobody else close to where he is. And he's going to get 100% of the revenue from the hardware and 100% of the revenue from the software.
Yep.
In addition to all of the other legacy platforms, Instagram, Facebook, et cetera, advertising. So you look at where they had the biggest blowout in Q1 out of the Mag 7 so far. NVIDIA hasn't reported. Their forward estimates have increased the most. And this thing is a cash cow that I just think goes a lot higher.
That's very fair. Roy, what's your next 10x play?
Yeah, I was about to type that one out. I don't have one other than just like long term, over like 10 years, I could see Robinhood as a 10x from here, which I know some people might disagree with. SoFi could be. I'm not as confident on that one. 5x, I think so. HIMS, I see as a 5x rather than a 10x. So I've got several 5x's, but like that's the thing is, in NVIDIA, I think is an easy 3x, over 5 to 7 years. I don't need every play that I'm in to be a 10x. I'm not even looking for that. What I'm looking for is quality companies that I think are undervalued, or at least from my perspective, undervalued, that I can hold long-term, sleep well at night, and let them execute. And more often than not, those companies tend to surprise me that I go in and I'm like, yeah, this is probably a 3 or 4x. And it ends up being a 6x, a 7x, an 8x. Companies can get better, especially if they have a strong moat and strong leadership. If I had to pick, actually, if I had to say, I'd just say I probably have no 10x plays unless you're looking at 10 plus years out right now.
Wow. That is a big statement. I think HIMS is definitely a 10x in sooner than 10 years. It's $10 billion. I think it could hit it. It's a big if. Very low percentage, but I think it's possible.
I mean, yeah, like almost every company I own, not all, are 10x. Like Tesla's a 10x potential, but like the likelihood, like if I basically I see none of them that I hold, do I see it as a likely scenario in 10 years that they're 10x? I just don't. Will one of them be? Probably yes, because they're good companies. I think all of the companies I own are good companies, or I wouldn't be in them. So.
Yeah, that's very fair. I mean, Hood, we didn't get to chat about Hood
Mhm.
today, but
Bitcoin.
Bitcoin, yeah. Why
Yeah,
not?
no, I DCAing into Bitcoin and Nvidia only. Those are my only 2 DCA plays. I do buy other stocks here and there. It's easy.
Okay. With that, we will wrap and join us next Tuesday. We moved Bootleg to Tuesdays at 8 p.m. For the foreseeable future. So join us next Tuesday at 8 p.m. Eastern, where we'll be talking about something on the Bootleg Weekly podcast. Thank you to 300 people for being here. Thank you, Steve. Thank you, Matt, for finally gracing us with your presence and leaking my DMs with you all week long. And thank you, Roy, for being on camera with me for 4 hours. Thanks, everybody. See you next week. Bye-bye.
Thank you, all.
Later.